Good morning, and welcome to the opening panel discussion of the 2023 Connecticut Conference on Climate Change and Insurance. This morning's session is titled Bridging Disciplines to Address the Challenges of Climate Risk, a roundtable discussion. I'm Frank Tomasello, Executive Director of the Institute's Griffith Foundation, and it's my pleasure to serve as moderator of this nonpartisan and non-advocative session, which is certain to be enlightening and inspiring. Joining me in discussion are three learned professionals: Lori Wing-Heyer, Director of the Division of Insurance for Alaska. There, she oversees and enforces the division's mission, which is to regulate the insurance industry to protect Alaskan consumers. Charles Nice, the Dr. William T. Holt Associate Professor of Risk Management and Insurance at Florida State University and Department Chair of the Risk Management and Insurance, Real Estate, and Legal Studies Department in the College of Business. Please note that Dr. Nice's comments reflect his opinions based on his 30-plus years of research on natural disasters and insurance, and do not necessarily represent the views of the state of Florida or Florida State University. And also with us, Mr. Christopher McDaniel, the president of the Catastrophe Resiliency Council, a nonprofit organization whose mission is to collaborate with risk and insurance-focused parties to create a healthy, competitive risk marketplace that promotes resilience against natural catastrophes. The Catastrophe Resiliency Council is an affiliate of the Institutes and a sister organization to the Griffith Foundation. Biographical information on all conference speakers can be found on the C4I website. Panelists, thank you for coming together to share your insights and expertise. Before we begin our conversation, let me also express our gratitude to Connecticut Insurance Commissioner Andrew Mays and his team for inviting us to take part in the 2023 C4I conference. In the 45 minutes ahead, I look forward to exploring the interrelationship of innovation, research, and regulation in managing the existential threats of climate risk. But to begin our conversation, panelists, I'm interested in your perspectives on the current climate risk landscape. Christopher, would you care to kick things off there and share your views with us?
Absolutely, and thank you for having me. It's interesting from an industry standpoint because there is so much pressure on the different industry organizations out there to do something about climate change, and it's a challenge that most risk and insurance organizations deal with on a daily basis. They're constantly being asked questions. There's concerns, obviously, by everybody in regard to climate risk, and to that end, everybody's kind of scrambling, if you will, to try to come up with what is the long-term plan, what is it that we're trying to do. So I would say, from an industry's perspective around climate risk, we're still very much in the early days of determining what the impacts are going to be, what the challenges are going to be, and what needs to be done to address those. But I am happy to say there's lots of activity, both from a industry and a government regulatory standpoint, and there's lots of initiatives to work together to define the problem properly, and then also to come up with solutions to ensure that we at least have a safety net. We can't do anything about the weather, but from an industry standpoint, but we can at least ensure that we're there to provide a safety net for everyone.
Thank you, Christopher. Director, I'm curious, care to add any color sort of through the regulatory lens? How do you see the threat landscape today in terms of climate risk?
No, I think Christopher has spoken very well on it. I think there's a certain amount of fear on the availability of insurance products that regulators are dealing with, as well as solvency of insurers as we go forward. But I think there is hope amongst all of us as we work together and come to the conclusion that climate change is real. It's not going away anytime soon. So we need to work together, academics, researchers, the industry, regulators, federal, local, and state governments, to address how the insurance industry will still be there in the next 5 or 10 years.
Thank you, Director. Chuck, your thoughts?
Yeah, absolutely. I want to take just a step back for a second and When we talk about the idea of climate change, I think one of the biggest things we think about from the academic perspective is, what is the exposure? And our exposures have changed over the last 30, 40, 50 years. So even without any kind of climate input at all, using Florida as an example, our population rate has been growing double the rate of the US population since 1992. So the amount of exposure in these areas where we worry about climate related losses, whether it's windstorm or hail, convective storms, wildfire, our exposures have grown exponentially in those areas, even before we start to layer on some of this uncertainty that we're seeing with climate. So from an academic perspective, we're still just getting a handle on how we think climate change is going to affect things like windstorm or wildfire. And the technology we have to predict those types of things, these single peril models like windstorm models or wildfire models, while they've been around for 20 years, they're still relatively new. So to think that we can reach some level of accuracy with these that for insurance purposes is very difficult. I think we have a very good general idea. We have a fairly good handle on some of these things like wildfire or hurricanes, but we don't have the level of accuracy yet that I think people are looking for, consumers are looking for, and insurers are looking for to accurately price these types of things moving forward.
Could I interject something there, Frank?
Please, Christopher, please.
Yeah, it's interesting that you say that. I had a very good conversations with one of the large insurance brokers the other day about this very subject, and the comment was, which I thought was very apropos, was we're pretty good at predicting short term and what our exposure is now and that kind of thing, but the challenge is what we don't know is being able to predict into the future. 10 years, 20 years, that kind of thing. I mean, it's a big blind spot for us. So there needs to be a lot of work in that space, and there is a lot of work that is starting to occur in that space to address that blind spot. Because if you don't know where you're going, how do you know how to get there?
Director, any additional color you care to add there?
No, I think that's, when I talked a little bit earlier about there's a certain amount of fear, and I think it's fear of where are we going and how accurate are the models. And as Charles said, the models are good. There's been a lot of progress made, but we still become caught off guard, such as you were talking about the population and the increased exposure in certain areas where we've certainly seen population growth. Texas, Southeast for the storms, somewhat in California for the wildfires. It's a concern.
We've talked a bit, or the topic of models has come up here a bit during our opening discussion. I'd like to explore that in a few minutes with you, along with other opportunities to innovate, to grapple with the challenges before us. Before I do, perhaps, Chuck, we could call upon you to maybe help some folks in our audience to think a little bit about the role and perhaps the limitations of traditional risk transfer. Where does that fit here within this puzzle of climate risk and grappling with that uncertainty?
Sure. I mean, when you think historically about what insurance companies bring to the table, we always talk about this concept of the ideally insurable risk, having a lot of exposures that are independent of one another, and they're kind of they're similar to one another, and to some extent we can pool them together, and we can use the non-losses of the many to offset the losses of the few. And from that perspective, insurance is really a social good. It actually helps remove risk from society. It works for things like auto, and it worked for homeowners for a long time until we started getting these more events where there's a lot of correlation between the exposures. So storms that affect a large portion of an area, even tornadoes to a certain extent, used to be very much regional. That region has expanded greatly. Flood is a great example too, even though that's not something that's typically privately insured. It's another area that affects a large portion of the population at the same time. And when you start to violate some of those underlying rules of insurance, you start to wonder, like, what is the value that insurance brings to the table? So you worry about the correlations and you worry about these events that can affect a large portion. The second thing I think insurance, and we talked about this, insurance companies have really done a very good job of lately, is this risk identification. They help to price the risk that exists. And I think insurance companies are actually really good at this. They don't tell people you shouldn't do something or you should do something. They kind of come up with a price of, if this is what you're choosing, this is the price of the risk that you face. And that's where the models come in. And you know, the historic looking back over losses from the last 10 or 20 years and using that to predict what's going to happen next year, that model doesn't work very well for these events that we're talking about. So these companies have developed these very forward-looking models, and they take into account, basically all the exposure that's out there. They model the exposure. They modeled, and for storms, they model the oceanography. They model the wind engineering. They have engineers putting together loss projections. They know something about the wind fields, and they can put together these simulations that come up with pricing. And to what we were talking about, the uncertainty level, these models come up with some pretty good aggregate levels. They can tell us a good idea about what the average annual loss is going to be in an area, but they're not very good yet. And maybe they'll get there, but they're not very good yet at saying something like, well, Frank, your house is going to cost $1,572.32 this year. That per exposure pricing, there's still a lot of volatility in that. And as insurance companies develop this, as they become clear, these models become better, and I think they will become better, I think we'll get to more accurate pricing. But that gets to the point that both Christopher and our director brought up here is, we want short-term prices. We want a price for the next year, and we're trying to price what really is amount to long-term trends with changes that are going on. And that's a very difficult process to undertake.
And the flip side of that, if I can add, is the pricing. We're finding some products, homeowners in Florida, I'm sure you've seen it, we're pricing people out.
Right.
Because the accuracy of the pricing for the risk, based on the model and based on history, we know that we are seeing huge rate increases if there's even insurance available. Yes. To protect the consumer. And that's equally a concern. I absolutely agree with you that the pricing needs to reflect the risk, but at some point that pricing becomes so prohibitive for the consumer, be it small commercial or homeowners, that we've created this perfect storm, if you will, to protect the consumers again.
Absolutely. And, another piece that I think is important to mention, in this stream of thought is, the post-catastrophe feedback. No matter how well we are at making models, there's always going to be variables that we didn't take into account. So it's extremely important not only to have, great exposure databases out there and that kind of thing, but it's important to have that feedback loop so that every time there is some kind of catastrophe, we're updating what we're doing, we're getting better, we're honing, we're, constantly doing that. I think that's a big factor that, that needs to be taken into account and, needs to be a formal process, not just something that, is done by an individual company, but, that we look at across the board.
Thank you. So what I'm hearing, I think, from the three of you is this notion of perhaps the ecosystem coming together to grapple with significant challenges of affordability, availability, challenges of a heavily regulated industry here, right? And a framework, a construct from a regulatory perspective that perhaps may create a bit of challenges when we think about innovation happening very rapidly. Is that a fair assessment? And how important is it for all folks to kind of come together to begin to think through opportunities to wrestle with the climate risk before us?
I'd like to jump in on that, Frank. I mean, I think when we talk about availability and affordability, I mean, this is clearly, it is a huge issue in Florida, but it's not the only place. I read a New York Times article the other day that showed that even the states that with the lowest insurance rate increases are still double-digit percentage rate increases over the last year. And it has to do with cost of construction, it has to do with inflation, has to do with a variety of other factors, including changes in loss exposures, changes in predictions about what's going to happen going forward. this is one of those areas, we talk about the individual pieces. The whole can do more than the individual pieces can do. I think insurance companies are very good at pricing risk. What I don't think they're good at is incentivizing people. Everybody looks to the insurance industry and says, well, fix the problem. You're charging me more. How do I fix it? And I'm not sure that's something that the insurance industry on its own can do. I mean, the way pricing works, sure, we incentivize mitigation by offering discounts on properties that are mitigated against whatever the most common risk in that area is. But that doesn't mean that the insurance industry is the one out there really pushing mitigation 101, trying to get consumers to harden their homes against these types of events. That's something that you need the political willpower to do. That has to be involved in the real estate industry. I always refer to it as the HGTV problem of, should I harden my home or should I put in granite countertops? And HGTV tells me that granite countertops are going to add to the bottom line of my house. And it's really hard to incentivize these types of things. And going forward, those types of incentives need to be there to really change the direction in which we're moving.
It's interesting that you say that. NIBS just recently put out a white paper around this very topic of how do you get in front of this, predict and prevent is what we like to call it at the institutes. But how do you get in front of the problem and stop the problem, but before it occurs? And their white paper that they put out is centered around what kind of certifications need to be put in place for like plumbers. If you've got a basement, you need to have a sump pump and it has to meet these requirements and all this kind of stuff to get ahead of some of these risks, before the catastrophe occurs. So it's a very interesting topic. It's a topic I think that probably doesn't get enough exposure, but it really should, to use a bad word. It doesn't get enough exposure, but it probably should get more attention, because I think the future of risk is going to be, stopping it before it occurs, not addressing it after, the horse is already out of the barn.
I absolutely agree with that. And I think that, the insurance industry or the insurers, excuse me, certainly have their stakeholder in this. I think we all agree on that. I think they're a big stakeholder in this. But I think a lot of this, we've got to go back to local planning, state governments, and certainly the federal government, and having a role of where we build and how we build. And if it's incentives from a local basis, like Alabama's doing in their program, Oregon's got a program, California's kicking off a program, we've got to recognize those efforts to solve this problem. So I think a lot of this that, as we talk about what the insurance company's role is also what's the role of going back to your community to promote these home hardening programs, but also looking at, as you were talking about, Christopher, what plumber certification, what kind of building certifications, where are we planning? What is the zoning community? What are they doing to make sure that some of these catastrophic losses are minimized to the degree we can?
Exactly.
Folks, I'm curious to build upon what you just shared, Director. What role, or how do you foresee the role of academia here as well? We've talked about notions of sophisticated modeling and innovation there. We've talked about matters of resilience and their importance. Where does the academy fit here? Curious to get your thoughts on that.
Academia can play a huge role in this and helping us get the consumers and the naysayers to believe that climate change is real and is having an impact on the insurance industry as well as other industries. There is still an amount of pushback in certain communities with certain individuals that what happens in Florida would be of a consequence in North Dakota. And yet I think we all need to come to the recognition that what happens in Florida does impact us across the U.S. Insurance companies are not going to design products state by state. They're going to design them to go across the U.S. from Florida to Alaska to Hawaii to New York. And we're all going to have to come to terms with what's going to happen in the insurance industry due to these trends because of climate change. And I think academia could play a huge part in helping us educate regulators, insurance companies, industry as a whole as we go forward.
Thank you, Director. Appreciate your thoughts. Chuck, Christopher, welcome your input as well.
Yeah, I would like to jump in on that. I think what academia has done so far has been on the modeling side has been very good. I mean, they've brought together a variety of different fields to kind of address a specific problem. What I don't think academia has done very good up to this point is address the financing part. So they've helped out, I think, quite a bit on the and I'm going to say the real scientists. I'm an economist, so the real scientists have helped out on the modeling part. I think this is our opportunity to kind of jump in here on how do we pay for these events. I mean, they're not getting smaller, they're not getting cheaper. So how do we approach this going forward? And what is the role of the private market? What is the role of regulation? What do we need a public-private partnership to think about some of these larger events that are occurring? I think we can look, and what we've seen is a very ad hoc response to this. You have states, I want to pick on the state of Florida. We're heavily involved in property insurance at the primary level with citizens. We're heavily involved with reinsurance. The federal government down here, they've done primary insurance through the National Flood Insurance Program. The federal government's got involved in high levels of reinsurance with TRIA on terrorism. It seems like a very ad hoc response. There's no consistent, organized, level it out plan of how we're going to address these things and who's going to address at certain points. I think we need to leverage some of the skills that and abilities that these different entities bring to the table. I personally don't think the government's really good at individual level risk assessment. So they probably shouldn't be involved in the primary layer of insurance, but they are really good at financing large scale events. And that's something that private companies are not good at. So I think we need to think about what the insurers are doing, what their role is, where reinsurance should be involved, and where the government needs to be involved. And everybody has a seat at that table to make these kind of discussions worthwhile.
Yeah, you bring up the point of citizens insurance in Florida. I think that's a great example of kind of a public-private relationship that's been created, obviously for the state of Florida, to help bring that safety net to bear. I've often thought that, in the face of climate risk, something similar to that, another public-private type of organization, but one that's nationwide to provide that kind of safety net, in the face of climate risk might be something that makes sense down the road. I don't think we're there yet. I think that there's a lot of foundational type work that has to happen before you can get to that point. But that might be, something that makes sense down the road.
I agree with your comments on reinsurers in particular. So I just wanted to jump in. In the past, these types of losses, the convective storms, the huge fires, they often rarely touched reinsurers to the degree they are now. So we didn't see the reinsurers coming to the table to negotiate for their treaties with quite the, I don't want to say attitude, but they're as scared as the primary insurers are as to where this goes in the next 5 or 10 years or beyond. So I think we're seeing them more involved in these discussions than we have in the past, because typically reinsurers didn't have the losses that they are taking as much as the primary insurers are right now.
I love to jump in on that comment too there, because I think part of that is that nothing has occurred in a vacuum. And when we've seen in areas of Florida where we've had a number of storms, there has been a market response, and the large, well-known insurance companies have retreated from the exposure that they have. And those are the ones that could afford to handle the big losses without tapping into high layers of reinsurance. And this gets back to that availability issue. When these large, well-known insurers begin to retreat from certain marketplaces, and we've seen it in Florida, we're seeing it in California, the insurers that fill that need, that fill that gap, they tend to be smaller. They tend to rely on reinsurance a lot more. And that is pulling the reinsurers down into working layers that they probably weren't involved in earlier years. And that, those losses, once they hit the reinsurance market, what we've seen over the last few years is how high those reinsurance rates have gotten. because of the losses that reinsurers have suffered. And again, that price volatility now gets trickled down to consumers, which they weren't seeing before.
Absolutely. Absolutely agree with that.
Yeah, I agree as well, and would echo that as well. And a case in point for the Catastrophe Resiliency Council, our chair and co-chair, our co-chair is a major carrier, and our chair is actually a reinsurer. So,
thank you, folks. I want to shift gears a little bit here and ask, what, if anything, can be learned from the international community when we think about innovation and resilience here to kind of grapple with the threats that we face? I'm curious to get your feedback on that.
I'll jump in and start the conversation here. I think we're in all of this together. I don't know that the international community is any more ahead of us or behind us on this as we watch the impact of climate change across the globe. I think that we're learning from each other how to keep products available to consumers, how to keep them affordable. I think some of the newer products, the parametric products, some of the higher retentions, community-based insurance, things that are coming out, we're all sharing the knowledge that we're learning as we go through this. But again, this is current day. This is happening so fast that I think I work with the Sustainable Insurance Forum, and I think collaborating with my colleagues there as well as through the IAIS and other groups, we're all in a learning mode here, and it's a steep curve.
Thank you, Director. Chuck, Christopher, your thoughts?
I'll jump in on two fronts there. First, one thing I always think is that what can you learn from international community? Like, I'll point to Bermuda, and I'll say what we should be learning from Bermuda is how to build houses, because they can't evacuate when a storm comes. They have built to be able to withstand the events that occur. And anecdotally, I was just over in Destin, Florida a couple of weeks ago giving a presentation, and as I'm walking down the beach, I am watching them build on a beachfront house on a cement slab with wood construction. And I'm like, so we're not raised in the air. Now, granted, we are beachfront. It was above the water level, probably by the minimum requirements. But I'm like, you're building wood frame on a cement slab, and that house is going to be there for the next 50 years. We're just creating more future problems. So I think number one we need to learn is how to build better. That resiliency part, that to be able to have sustainable communities that can bounce back after the fact. The second component that the director brought up there is the financing component of it. Yeah, I always think about this. The goal is to get to capital markets, right? That when we have $100 billion or $200 billion storm, we think that's a huge loss to the insurance industry. But 100 billion, 200 billion, that's a couple of minutes of volatility in a capital market. So how do you take this type of specific risk, industry specific risk, and securitize it in a way that we can make markets help with this? And you think about credit card debt and mortgage backed securities. How can we get insurance linked securities? How can we get those markets to work better and to be more efficient in the transfer of risk? And I'm all for that. But there is one caveat on that, and that those markets, the prices are market determined, and they do change through time. And that's something people are going to have to understand, that the cost of capital associated with these risks is not a consistent level. It does vary quite a lot.
Very true. I'll jump on my soapbox for a second on one thing from a European standpoint. And in not just European, but globally, outside of the U.S., flood insurance is not a separate item. It's something that's incorporated with everything else. And in the U.S., it's a constant challenge to get people to get flood insurance and to justify why they need it and that kind of thing. And a big part of the problem is because we make it a completely separate entity. If it was something the way they do it in the rest of the world, where it's integrated with the rest of the perils that you're covered for, it would go a long way toward getting better coverage from the flood standpoint. It's just an uphill battle that is very hard to justify. and that's why your house on the beach there probably doesn't have flood coverage automatically built in.
Yeah, flood insurance is, I'm going to guess here, this is just me picking a number, probably 95% of it is purchased because the mortgage company says you're in a flood zone and you have to buy insurance, even
Right.
though you can, with relative simplicity, look at where you live and see what your surrounding areas are and think, yes, there's a potential for flood. We see it in Alaska, for instance, of communities flooding every year that are on a river because of when the ice comes out. You know, when the snow melts and the ice comes down, we have a flood. These people know this, and yet we know, when the governor's office calls me on these and says, "Is there, will they have insurance?" And I'm like, "No, I'm willing to bet they don't, because we just know what the take-up rates are." And there's so many communities where people only buy flood insurance because their mortgage company says you have to have it. And if they were a little bit more selective on making people buy it, because there is a risk, regardless of what the flood map says, I agree with you. It would be better for communities, better for consumers. I feel the same way about earthquake and some of the other catastrophic perils that mortgage companies and others, just if they don't require it, they don't buy it.
Right.
Yeah, I think that's a big issue. I mean, but this also gets back to that availability and affordability issue. Like, to me, this is low-hanging fruit. This should be, get the consumer out of the wind versus water argument, make it part of the homeowner's policy, make the National Flood Insurance Program a reinsurer and then the consumer's out of the discussion. You know, down here in the Southeast, you know, when you come back, you evacuate because of a storm, and you come back, and all that's left is a cement slab, and then you got to argue whether it was wind or water. You know, it shouldn't matter. Let that happen on the back end. But the problem that we mentioned earlier is when you do this, and this is something that Citizens is beginning January 2024. If you are a Citizens policyholder in the state of Florida, they are requiring flood coverage. Whether you're in a floodplain or not, they're going to want you to have, and they're going to enforce it. But that adds to the cost. And you know, that's why there was a study that came out. I think it was First Street just came out with a study talking about drops in their predicted drops in property values because of climate change and because of these increased insurance requirements in Florida. And they're expecting huge property value drops in Florida. And again, then we get back to what happens now. What happens to growth? What happens to the economy? All that kind of fun stuff. Are we seeing, and First Street refers to it as a housing bubble. Are we seeing another housing bubble, especially in these cat-prone areas?
Yeah, if I could add to that, your comment, it's well taken. And I think what it shows is something we've discussed here, is the local communities, the state, federal government getting involved. And certainly Florida standing up and saying you have to buy flood insurance is one example of a state saying we have got to change the way we've done business.
Yeah, that's very promising.
A follow-up question along those lines: what opportunities, if any, do you see, sort of through this lens of educating consumers? And is there a gap there? And are there opportunities to perhaps increase education or pursue consumer education in a bit of a different way? Has anyone
yes,
wrestled with
and
that?
yes. I was in Memphis a couple of weeks ago and had the opportunity to speak with the Emergency Managers Association, and much like the insurance commissioners, these were the emergency managers from across the United States. And what we were talking about on the panel was being able to educate consumers. And one of the examples I gave, and I'm sure Charles and Christopher can talk about it, is there is so much data on the internet. I gave the example of division websites. We all put a ton of data up there to look at flood insurance, to look at, making sure you're not uninsured, look at perils where you live. But getting consumers to the links to really research on their own, instead of just having an insurance broker, and this is not a dig at insurance brokers, but an insurance broker say, here's a policy, this is a standard homeowner's policy, you're going to be fine. And really doing a risk assessment with the consumer doing their own risk assessment, and looking again at where they live and what has happened there in the last 20 years. What insurance should they be buying to protect themselves? And frankly, then there is going to come a cost element of, can I afford everything I need? But there's ways to help that. Take a higher deductible, really insure for the catastrophic loss as opposed to, I lost a window type loss.
Yeah, absolutely. Because some kind of a consumer dashboard where they can get in there and got sliders back and forth where they can, raise or lower their deductible and see the impact and what their coverage is and all that kind of stuff. It's something that's a universal dashboard is something that's definitely missing.
Yeah. I think one of the biggest barriers to this is consumer education. I've been teaching risk management and insurance now for more than 30 years. And the simple fact of the matter is it is a complex issue that we don't have a 30-second pitch to make people understand. And the more complex it gets with catastrophes, the less people are interested in trying to develop their understanding of it. And in most cases, when people are going to, especially with choosing a location to live, they're not looking at how often hurricanes happen. They're not looking how often wildfires happen. That is so far down the list of priorities for location. They're looking at the amenities that are offered. They're looking at job opportunities. They're looking at a variety of other things. And one of the last decisions is how much is insurance going to be in that area. And that needs to move up the priority list. And maybe it's something where they start looking at differential mortgage rates in some of these areas. Higher risk areas have higher cost, and we have to be able to communicate that to the consumer earlier in the decision process if we're going to try and really make some headway on them understanding the risks that are involved.
And I think to add to that, we need to work with, as you were talking about some of the mortgage companies and such, because I think we could really quickly, we're getting there where homeowners, we all say, oh, well, with the mortgage rates, who can afford to buy a home right now? Well, with the insurance rates. And if the mortgage rates came down, some of these areas, people aren't going to be able to afford the insurance.
Right.
And there's a correlation there that what you were talking about. Yeah, it's sunny all the time. I'm getting a good job offer. Let's move. We're going to be closer to family. Never considered that the house they just signed for, that the insurance is going to be $6,000-7,000 a year.
Yeah.
And all of a sudden, that's a big burden.
Mm-hmm.
So panelists, I'm curious, are there any jurisdictions within the U.S. or for that matter abroad who've done anything that's novel in the way of educating consumers? And are there any jurisdictions gaining any traction or momentum in a positive way here?
I can talk about it a little bit. There are some areas where they've done some work on educating consumers on these issues, not as much as needs to be done. There was, and I'm going to pick an anecdotal example there. Here in Florida, they used to put up, this is years ago, this is before I moved here. This was in the late 90s. They used to put up signs about, when a storm occurred, how high the water level had been. And here's a sign that shows the water level during this storm was this high. And the realtors wanted them down because people didn't want to buy in those areas when they saw how high the water levels were. So there have been anecdotal evidence of these types of educational opportunities, but I haven't seen across the board where anyone has really been very good at educating on location-specific risks prior to entry to those areas. It goes against what those areas want. I mean, they want growth. Right. I mean, they want people to want to be there. They want people to live there. That, our whole economy is based on growth, and it's hard to come up with a good economic model of how you can develop in a certain area if people don't want to be there.
I would just add to that. I think we can do a whole lot better as a regulator. I mean, certainly the insurance industry is putting dollars towards education and letting consumers know, and the industry itself is. But as a regulator, some states are doing a much better job. I will say the regulator in Alaska, we do a pretty crummy job. We put stuff on our website. Occasionally we run ads like you're talking about to say this, you should think of this. But we need to get more involved in the community. We need to get out and actually talk to people if they want to hear us or not, that this is coming or this is happening. And they need to help us looking again at home hardening and the things we can do to be more supportive so that we have an insurance industry in the future.
Thank you, Director. Christopher, any thoughts from your window there?
Yeah, I think that I definitely think that we need to have more of that kind of consumer education out there. I know that through one of our affiliates at the Institute III, we do a lot of communication outwardly. But it's not just a matter of creating the communication; it's getting people to actually look at it and reading it, and having an incentive to go out to this website and take a look at that. So it's not just a matter of build it and they will come. You have to build it and figure out how to promote it properly too, to get the people to come.
Yeah, insurance as a whole, it's not sexy, it's not fun. There's not a win or a lose at the end, and everybody can, toast to one another. It's just, it's hard to get people. And frankly, this is across the insurance board. It doesn't matter if it's healthcare insurance or if it's auto insurance or if it's property insurance. It's
Right.
hard to get people interested.
I mean, I agree. That's the number one thing, individual insurance companies are very good at marketing themselves. The industry as a whole has not been very good at forming its message. And it's always the big bad insurance companies are always, we have a large personal injury law firm here in Florida that, is always bashing the industry, and the industry does nothing to do anything about it. And I think that's one of the issues. People view insurance as a cost. It's not a benefit to me. It's not a good product. It's just a cost to me. And why would I worry about it's just another bill, just like my electric bill? I'm not going to worry about it. I think that until we can change people's perspectives, we're going to have this issue going forward.
Thank you, panelists. We are rapidly approaching our 45 minutes time of conclusion. So let me pose a final question for your reaction here. I'm curious, individually, as you sit there, do you see the climate risk glass as half empty, or is it half full? And if you look ahead 2 or 3 years, how do you see things evolving? So a compound question for the three of you. I'm not sure who would like to jump in and tackle that one first.
Sure, I'll jump in first, and I would say that the right now the glass is starting to be filled up. I wouldn't necessarily classify it as half empty, but we've got a long way to go. I think we're just now starting to bring academia, regulatory, government, industry together to focus jointly on this. For too long, we've tried to attack this in silos, and it's essential if we want to see that glass to be continue to fill up, that we all work together. I mean, we can't do it. No organization, no entity can do it alone.
I agree wholeheartedly. I think that I know we started talking about getting people more an understanding about how this is going to affect things moving forward, climate change, but I think we've actually made great strides over the last 20 or 30 years in addressing this. This is a long-term problem, and it's going to take a long-term solution to fix. And my view on it is always the glass is half full, because we actually have time now to focus on long-term problems. We're not putting out daily fires in the industry that we can't focus on something like this. So I'm going to take the glass is half full approach. But having said that, there is still a ton of work to do.
Thank you, Chuck. Director, your thoughts?
I'm going to go with the glass is half full, because I think that it's certainly becoming discussed in more circles and more circles, where I think we used to be pretty siloed when we talked about climate change and the impact. I think that there's more discussions, not just at and I don't want to use the primary level, but at the primary level of property insurance. That's where we saw the greatest impact. Now we're seeing it as insurance companies again, and I'll just make an example here of Alaska. We're an oil and gas state. Insurance is becoming harder to find because insurers are saying, well, if we're going to go to zero carbon emissions and such, we've got to look at how we're insuring certain industries. It's not just on existing oil and gas, but green technology. We're starting to see a change of it being addressed throughout the industry. So I think there's hope. But as both Christopher and Charles have said, there's a lot of work ahead of us. I think that my biggest fear on this, quite honestly, is that consumers will get tired of hearing it. And so I think we need to figure out how to communicate to them. I mean, who's not tired of hearing about COVID? And so consequently, I think we're becoming a little bit more lax in our protections or how we are working to keep people healthy. And I'm concerned that with climate change, our communication needs to be that we can't fix it today, but we do need to work on it so that we do have sustainable housing, a sustainable economy, and certainly a sustainable insurance industry.
This has been an enlightening roundtable discussion. Our time is drawn to a close. Many thanks to you, our panelists. Lori Winghire, Director of the Division of Insurance for Alaska, Dr. Charles Nice, the Associate Professor of Risk Management and Insurance and the Department Chair of RMI, Real Estate, and the Legal Studies Department at Florida State University's College of Business, and Mr. Christopher McDaniel, the President of the Catastrophe Resiliency Council. It's been great to have you here. We appreciate you sharing your insights and expertise with us. Also, a special thanks to Connecticut Insurance Commissioner Andrew Mays and his team for inviting us to be part of this conference. I'm Frank Tomasello of the Institute's Griffith Foundation, inviting you to stay with C4I as the 2023 programming continues.